Hi, this is Stephen Carter, Executive Director of the Cultural Center. Thanks for joining us on our YouTube channel. Today, I've got with me as a special guest, William H. Wakeman III, Bill Wakeman.
Good morning.
Morning, Bill. How are you?
Very good.
And Mr. Wakeman is the namesake now for our theater here at the Cultural Center. It's the William H. Wakeman III Cultural Center Theater. And with your experience in financial planning, charitable trusts, and all the tools that you can use in your tool bag to help folks, we were talking in an earlier segment about charitable trusts. And I think one of the other aspects that's very important is how you can utilize life insurance to help you with that. So would you like to go into some detail and go over that for the folks at life insurance and how you can utilize that?
I always love to talk about life insurance. Life insurance is, typically when somebody is talking about that, all of a sudden the barriers come up. It's automatic for people to think, oh, it's costly. The person that's selling it to me is just making a commission. That's why they're selling it. All different kinds of negative connotations when it comes to life insurance. And I can tell you, whenever I was going through college, and my degree was in insurance and real estate, but when I was going through college, I learned about life insurance in one of the courses in that. And right off the bat, I understood it and have never thought about it in any other way other than the fact that it is an asset. And it's a tool, it's a financial planning tool that's powerful. It can be adapted in all different kinds of ways. And because it has so many negative connotations and perceptions about it, it's not recognized very often for what it is. It is a powerful tool that can be used in addition to the simple fact that it provides a death benefit. And that death benefit is powerful and needy, and there's all kinds of uses for it. But I really focus on the fact that it is an investment, that it can be used to provide creditor protection. It can completely avoid tax, and properly used, life insurance is a powerful financial planning tool. It can be owned by retirement plans. It can be owned by charitable trusts, in addition to individual ownership. So it provides all kinds of benefits that are just not very commonly understood. And so you can see I'm passionate about it. I'm passionate because I recognize the value. And at my age and having been dealing with that for many, many years, I have seen how it has positively impacted people's lives.
I think one thing, and you mentioned it when you began talking about life insurance, is with insurance, it seems that everyone thinks that they don't need it until they need it. Sounds like an oxymoron there, but actually I think that's very true for people, and getting them to be open-minded enough to listen to all the different aspects of it and the ways that it can be used for you to help you. And I think that's a very important thing for people to understand because, when you talk, generally speaking of insurance, a lot of people think, well, why do I want to pay for that? I don't need that right now. And life insurance or any other type of, whether it's PNC or whatever type product too that's out there. So I think that's a really important thing, but showing them how they can use that to benefit them not only with the death benefit, but obviously during their lifetime is critically important. And in doing so, how would you go about doing that?
Well, first off, I am focusing primarily not on the death benefit whenever I'm incorporating it as a tool for financial planning. I'm focusing on the investment itself, the tax benefits. Incidentally, the tax benefits of a life insurance policy far outweigh the cost. So people all automatically think about cost when they think about life insurance. There is a cost, but it is far outweighed by the benefits of tax savings, and that's what I focus on. It is almost always utilized in any good financial plan. So that's one of the things that I introduce in a first meeting with a client. I try to get them over that hump of the negative perspective of life insurance. And there's no sense, because it is a life insurance contract and it's medically underwritten. Right off the bat, I typically would like to have my client do an informal inquiry. And I always like to explain that up front, because if I'm going to incorporate the use of a life insurance policy, there's no sense in using it if on them as an individual, particularly if their health is bad or they have some issue that might prevent them from getting issued a standard policy or a preferred underwriting. Mm-hmm. And so it is a contract, it is a tool that's used, but the cost of that is based on the underwriting criteria. So right off the bat, I usually use a very non-invasive way of evaluating that individual for life insurance underwriting by using an informal inquiry. And the informal inquiry is as I said, non-invasive. If you do a standard life insurance application or a health insurance application or any other type of something that's insuring your body, typically, that information is going to be shared on the Medical Information Bureau to all other insurance companies, and as well as they share other information that they develop in the underwriting process, sharing credit information and things like that. A lot of times, especially if they don't really know that they're going to be buying that life insurance policy or utilizing that in their plan, they really don't like that information to be shared. So the informal inquiry is a release of medical information and credit information to the insurance company, where they are evaluating the risk for that person, but it's not shared with anybody else. It's individually underwritten. Mm-hmm. And so most people don't mind that. Most people are okay, knowing that information is kept private and secure, and it gives us the opportunity to determine their insurability. And then if we're going to use that as a tool in the financial plan, we know up front what the underwriting relationship is going to be. Is it going to be standard? Is it going to be rated? And of course, if it was rated, where the cost would be a factor, then we're going to look at insuring somebody else in the family or a combination of people in the family.
And I think that it all goes to building that trust factor, building that relationship with people, and how you approach it, because a lot of people think they're somewhat hesitant when it comes to the underwriting questions that need to be asked when you do mm-hmm. proceed and go a little further on into that aspect of issuing a policy. So that's absolutely essential to making sure that they trust you and they feel comfortable with you. And I think anybody that's ever spoken with you would certainly agree that that's the way they feel, because you come across, I think, as quite the expert in the field, but you're very easy to talk to, and I think you simplify some very difficult, more involved areas.
Thank you.
Which is very well done with you.
Thank you very much.
So we're going to take a quick break, and we'll be right back with another segment. I want to thank Mr. William H. Wakeman III. It's Bill Wakeman. He is our benefactor of the Cultural Center Theater. It's the William H. Wakeman III Cultural Center Theater. My name's Stephen Carter, Executive Director of the Cultural Center. Thanks for listening to this segment of YouTube. We'll be right back.